The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time, and we got markets extending the gains from yesterday. We'll get into the PCE in a moment. Comes in a little bit lighter on the inflation front. You see the volatility this morning. Let's zoom in on it. That's the 830 bar, man. We jump about 15 points. You give it up pretty quickly, and right now we're sitting pretty close to 4,100 in the S&Ps. NASDAQ 100, you're up another 0.3% right now. You just spiked to 12,132 on that economic data at 830. We're back a bit to 12,080. Far cry from where we were yesterday at about 2 p.m. Eastern Time, 1:30. We're about 600 points higher from where we were on the NASDAQ 100. And there's the Dow. How about 1,000 points on the Dow, man? From 33,623, the lows of yesterday, about noon Eastern Time, to 34,700. We might see 35,000 today, depending on how this open goes and where the market goes. If it extends the gains or pulls back a bit, quite the day yesterday, man. And the Russell is up by another 0.4%. How about the Russell adding 80 points from where it was yesterday at noon, man? I mean, that's what, 5.5% from where we were yesterday in the Russell? Bitcoin giving up some of the gains. We're under 17,000. Not sure why Bitcoin's trading at 17,000 with everything still imploding. But boy, if you need some gas, go out and fill up that tank, folks, because crude is trading higher. It's interesting. I'm seeing a lot on social media lately about the price of gas, right, which was down considerably, man. I saw $3.48 recently around my area. I saw some posts about $2.98 somewhere. Not going to happen right now, man, as we just have crude trading from 73.60, the lows of 3 days ago, basically, and we're sitting at 82.82 on the dot right now for crude as it pushes higher. And you want some action. Now, some of these numbers, folks, okay, are going to coincide from the move of yesterday. Like the gold contract, I think the gold contract, maybe someone can help me out in the den, I think it's 130 that the futures contract closes at. So you're seeing the contract up $48. A lot of that coming in from yesterday, okay? And it's probably 130 because there's the bar, man. The futures actually closed at 1760. We accelerate intraday to about 1783, but we're accelerating higher from there. Gold above 1800. You gold bulls, watch out, man. Quite a run. Notes and bonds, yeah, higher price, lower yield, to say the least, man. We got the 10-year. Now this again, it says up 20 ticks on the session, right? A lot of that having to do with the move we had yesterday. Okay, we're sitting at 114.04, basically where we were at about 6 p.m. yesterday. We're talking about a 10-year yield below 3.6. Below 3.6, man. You put this thing on a daily, we're coming into an area that's potentially the upper boundary of that channel line. And this dates back to basically the beginning of the year, man. You started at 131, you got to 108. We're back to 114 right now on the 10-year. And you jump over to the 30-year. Up a full 0.26 ticks at 128.26. Let's jump over to the VIX. 2055. Fell out of bed yesterday, man, but couldn't get below 20. We're sitting at 2055 on the volatility index. And let's jump around to some of the currencies. How about the dollar index, man? From 107 to 104. Yeah, 107 and change to 104 and change. Nonetheless, huge move in the dollar. We'll take a look at the daily. I mean, that's a decisive break, man. We were within that channel line, folks, since the beginning of the year, basically, and we are well outside of that, and it's absolutely remarkable that you're almost back. You are back. Yeah, you are. Yeah, you're back to where we were on May 13th in the dollar index, man. Pay attention to those currencies. You jump over to the euro-US dollar, accelerating higher to 105. So much for 95, man. So much for parity. Not the case anymore. And we jump over to the yen, dollar-yen, pulling back pretty decisively. That helping out some of the gold, of course, this morning with the yen backing off from 151 to 136. And we are so close to even back to April, man. Now, yeah, that's a full almost 4.5 points. But in April, we had the yen at 131, and we're at 136 right now in the dollar-yen. And let's jump around to some of the headlines. So, yesterday's headline, Powell signals downshift likely next month, more hikes to come, peak rate to be somewhat higher than thought in September. We kind of knew that. We knew a lot of this, man. Maybe it was just confirming a lot of what everybody thought. 50 basis points seems to be the consensus, December 13th and 14th. The time for moderating, this was the quote, I was listening. The pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the question of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. Now, what's so interesting about when you get Fed speak, man, is that he has to, folks, be hawkish. Because the whole point of being hawkish is to create tightness in financial markets, right? So that there's tightness, there's less money flowing around, it tames inflation. As long as the market thinks they're going to be higher for longer, that'll cause the economy to remain tight. It will tame inflation. If Powell said, hey, we're going to be fine, I think we're going to start cutting late next year, I think we're going to start cutting in 2023, the market would get ahead of him. And that would be a self-defeating purpose, that you would actually have the market getting ahead of the Fed, therein opening back up financial liquidity, right? Loosening financial liquidity, therefore allowing for inflation to stay persistent potentially. So that's yesterday. This morning, let's jump into core PCE, man, because that's a welcome surprise to the downside yet again. A slight miss, but anything on the right side, folks, should be something that we accept right now. And you're looking at the core number, 0.2% in October from a month earlier. The market was looking for 0.3%. The overall PCE price index increased 0.3% for a third month and was up 6.6% from a year ago. Yeah, the market's looking for 2%, okay? So we're still well off there. The median estimates, we're looking for 0.3% on the core and 0.4% for overall. So we come in 1/10 light on each number. But there's a lot in here, folks, okay? Yeah, the expectations are sky high right now with inflation, and we're coming in under the expectation, but we're not out of the woods yet, obviously, right? Inflation-adjusted outlays for merchandise jumped 1.1% in October, fueled by motor vehicle purchases. Interesting how the pockets of this economy are differing. Spending on services climbed 0.2%, boosted by outlays for accommodation and food services. How about the savings rate? Falling to 2.3% in October, the lowest since 2005. Probably what the Fed likes to see, man. Inflation-adjusted disposable income climbed 0.4%, the most in 3 months. Not sure that's what you want to see. Wages and salaries, unadjusted for prices, increased 0.5%. Sustained wages, particularly in the service sector, could keep inflation persistently higher than the Fed's goal for an extended period, underscoring the importance of the labor market to the Fed's decision-making in the months ahead. I was listening to Chairman Powell yesterday, and it was interesting in terms of where he thinks even unemployment may go, because his general consensus was that, and I don't want to call it he's hoping, but everybody's kind of hoping right now, man, because, one of the things he was saying yesterday is this is a unique situation, man. The analysts, this is a unique situation. I think he used the phrase, we have an N of 1, which is a sample size of 1. When you have a sample size of 1, folks, very difficult to meander that. And his general thought was that with so many jobs open, right, we could see the job market cooling without unemployment rising the way it has in years past when the Fed is hiking when we go into a recession. Not sure that will be the case, but we get to find out. Stay tuned, folks. S&P's just under 4,100. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps up by 16 points right now, just under 4,100. You get the NASDAQ 100 up by about 36. You get the Dow up 61 points. And how about the Russell, man, nearing 1,900? Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network, with Fast Market. Your host, Kevin Hincks, Tom White. And let's just jump right into it, man. We got quite a fast market. Kevin Hincks, good morning.
It turns out, Tommy, the Jackson Hole Jerome Powell, who scolded the markets, was possibly just a one-off event, because that Jerome Powell that delivers the news to the markets, the delivery mechanism that is Jerome Powell that the markets really like, was back yesterday. And he gave the markets just enough of what they needed, moderate the pace of rate increases. That was one of his statements. The market loved it, and with looking where yields are this morning, Tommy, looking where the U.S. dollar is this morning, now below 105, this market has room to run, Tommy.
Pretty remarkable, the moves, man. I was jumping through, as you were saying, the dollar index yesterday was above 107. Today it's below 105. We got the 10-year right now under 3.6, Kevin. Remember when we were having the conversations about 3.5 and then 4 and blowing through 4, and just like that, we're back to 3.6. Pretty remarkable how the market can shift like that. But guess what? Data is important, Kevin, and we jump right to it. We got some PCE data this morning. Pretty encouraging as light of the estimates for inflation, but some pretty lofty numbers, in the context of where they are overall, 5-6% on a yearly basis. With that in mind, we go right into the non-farm payrolls tomorrow. What are you looking for a day like today, Kevin, where we get such an acceleration higher yesterday? We kind of get helped out by the PCE, as in that shouldn't be anything that's an impediment, because it's kind of on the good side of inflation taming. When you get that type of a run, man, we're near 4,100. The Tiger's Den this morning, the discussion is, we're up. The Dow's almost in a bull, Kevin. We're up almost 20%. Is that a bear market run. Some of these moves, they're pretty lofty, man. In general, what do you think of kind of the acceleration? Because we're approaching, I think S&P's up like 13%. Pretty big pop if this is a bear market run.
Yeah, this move is pretty big, and it's certainly, at least today, I believe the markets will get a little hesitant and conciliatory ahead of tomorrow's number. But also, I wouldn't rule out the fact that, remember, a lot of yesterday's rally was just getting back some of the numbers that we lost earlier in the week or a week or so ago. So do I think this market has room to run? Yeah. I think the PCE data that came out did nothing to scare this market away. And with Jerome Powell being more conciliatory and China being more conciliatory and a rail strike being averted, I think this market has room, Tommy. I think it can run. Now, there could be a news headline. There could be data tomorrow that upsets the market. But I would expect yesterday's rally, the second half of the day, to continue today.
I appreciate the take. It's not an easy one, man. Say, what's going to happen today after the markets go up 3 or 4 or 5%, man? Some huge moves. And I'm going to go a little bit longer term, Kevin, because we know we got the short term, man. We know we got non-farm payrolls tomorrow. If we get a surprise, a shocker, that could move the market. But what do you think of the general discussion? And I love how you say, keep it short term, man, because you start going out long term. It is so difficult right now. But I'm hearing a lot of the conversation right now taking place that, okay, we're getting over the Fed, right? Maybe we're going to start taming inflation. But boy, a lot of analysts I'm reading, man, 2023 might be a tough year for earnings as kind of the Fed impact takes a hold on the earnings, on the economy. What's your general thought of as we, it's December 1st, man, we're 1 month away from 2023. When you hear that rhetoric, Kevin, just generally, what's your general take of where we go beyond? If we are and not over inflation, right? But maybe we're over 75 basis point hikes. Maybe we're starting to turn the corner. You made the points. The dollar, the 10-year, very tough to deny, man, that there have been some dramatic turns. So my head is start going, okay, so if this is kind of the Fed completing their process of really coming at the market and to tame inflation, is it now time to start trying to digest what's actually happening to the economy as we go forward for the next quarter or two, even the next year?
Yeah, I think the future is uncertain, Tommy, because now you start getting into 2023. Once we get into mid-2023, guess what? We start getting into elections. And elections, what we just saw in this past election, people start buying votes and passing legislation. So the good news about the House and the Senate possibly being split is that all that will probably come to a halt. And we'll have to deal with just the simplicity of the strength or weakness of the U.S. economy, Tommy. And, yeah, could next year be a flat to modest year? Absolutely it could. And what will depend on that? The data and the Fed's reaction to the data. Earnings will drive a lot of these stocks. When and from what level does growth start to get a bid again? I mean, we've had, the ARK fund rally significantly yesterday. It's up again today. So there's so much to look at, so much to pay attention to. But, yeah, next year could be just as dicey as this year, but maybe a little bit of, it could be a rocky road climbing of worry next year. But who knows, Tommy? I mean,
that's it.
It all depends on the data. It all depends on the U.S. consumer. It all depends on what happens with the overall job market. There's so many things. A lot of reasons to pay attention, but you're right, Tommy. In general, keep it short term.
And, I know I'm asking you almost impossible questions, right? What's going to happen next year, Kevin? Where's the market going to go? But it is interesting, man, as we kind of get over this hump potentially of inflation, and my mind just goes to the next one. Okay, if inflation's tamed, what happened to the economy that as we've been hiking pretty dramatically all this year, and maybe we got the turnaround. But boy, a lot of analysts talking about 2023 might be a tough one, man. With that in mind, Kevin, we still got some
for your viewers.
Sorry, one more time. What'd you say?
This may be a choppy, unchanged market for a year. Your viewers should look into and educate themselves on covered call strategies, where you're owning stocks, you're long stocks, but you have short options, out-of-the-money options against it, and collecting that data. You'd be surprised how over a year of a flat market, how much earning earnings you can derive from short options.
It's a great point. That's why I love watching Fast Market at 12 every day, man, especially when in the VIX relatively low where it's been this year, but historically sitting at about 20, a lot of volatility premium if we get a choppy market. And I imagine we're going to have some dramatic moves in one way or the other, like you say, choppy. But yeah, very, very easy to see that maybe we end up somewhere in the ballpark of where we are right now. With that in mind, Kevin, I know we're kind of coming towards the end of earnings season. What are you guys talking about on Fast Market at 12 today?
Final month of third quarter earnings season, Tommy. We'll look at three good names today. Zscaler, we'll look at Marvell Technology, and then like Folio, we'll do a presentation on Ulta Beauty.
Ulta, man, those big stores, and you talk about it, man. I got the weekly up there. Not many charts, Kevin, are a one-way trip from the lows of COVID to higher price. And this thing, you can't hold it down, man. Even this year, up from about 400 to start off the year, we're pushing 464. I guess makeup doing pretty well right now from that chart. Well, Kevin, we appreciate the time as always on a busy morning, man. We'll be watching at 12. We don't talk to you tomorrow, and we'll talk to you next Tuesday, man.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Folks, tune in every trading day. Covered calls. You heard it. Those are the types of strategies, folks. I've learned a tremendous amount watching Fast Market. Check it out at 12 o'clock today. We got quite a market. It's a fast market, as the name says. Stay tuned, folks. We'll be right back for the open. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. And just like that, we give up some of the gains coming into the opening bell. You see that little drop-off, man, from 830 on the PCE. You jumped to 12,132. We just almost gave up 100 points from where we were, man. What happens if the PCE comes in a little hot? That was a nice number. We got the Dow negative by 4 right now. You got the S&Ps up by 9, but we just gave up about 15 points. And you got the Russell up by 4, but the Russell gives up about 10 points. That's about 0.5%. You see the Russell. Crude persistently higher, man, 82.77. The gold contract continuing to run right now. And let's jump over to currencies because they're driving so much of the action with the dollar index at 104.93 right now. Quite the move. And let's jump around to some of the articles I had pulled up here. This is just an interesting one as to how it plays out. Taiwan Semiconductor plans to make more advanced chips in the U.S. at the urging of Apple. Yeah, I would say so. Get it out of Taiwan, man, if you can. Will offer advanced 4-nanometer chips when its new $12 billion plant in Arizona opens in 2024, an upgrade from its previous public statements after U.S. customers such as Apple pushed the company to do so. And they're expected to announce that, I guess, next Tuesday, but they haven't announced it yet. They were slated to make 5-nanometer semiconductors, a standard that will be far from cutting edge by 2024. Yeah, so what's the point of that, man? You know, you're going to create a $12 billion facility that's, by the time it's up and running, is going to make chips that the world doesn't even need. So they're going to be pushing 4 nanometers. 4 nanometers, man. Crazy. And they're going to commit to adding a second nearby plant, which will make even a more advanced 3-nanometer chips. This one's going to be persistent, folks, with China and Taiwan tensions escalating. We'll see how that plays out, but not surprising to see Apple, of course, pushing those chip makers to be doing stuff in the U.S. and to have it be cutting edge, to say the least. All right, you talk about cutting edge. How about they cut the edge of your brain and put in a computer chip, man? Musk's Neuralink hopes to implant computer in human brain in 6 months. Here's my advice. It's the best advice you're going to hear all day. It's the best advice that's in the program all day, folks. Do not let Elon Musk put a computer chip into your brain right now. Don't let it happen, man. And I got no problem with Elon, man. The Twitter deal, that's the best reality show out there. It's his money. He wants to buy it, make it a private company, and do with it what he pleases. God bless. But when you're talking about opening up people's brains and putting in chips, man, this is going to happen in the next 6 months. Is that what this is? Yeah, 6 months. Now, you're seeing this article all over the place, folks, and you're going to see it all over the place. Excuse me. Battling a little bit of a cough this morning. The startup awaits implant approval while already working on curing paralysis. And listen, you know, in the future, this is the future, okay? But the future takes a little bit longer than sometimes think, and Elon is the king of over-promising and under-delivering, man. And you talk about putting computer chips in people's brains, okay? 6 months, the company announced at an event headquartered at their headquarters on Wednesday. They've been refining the product, which consists of a tiny device and electrode-laced wires, along with a robot that carves out a piece of a person's skull and implants it into the brain. Ongoing discussions with the FDA have gone well enough for the company to set a target for its first human trials within the next 6 months. And, you know, listen, if you're dealing with a debilitating disease or something like that, yes, okay, you want to take some chances. I totally understand it. But the problem with Elon is that it's very difficult to trust what he says sometimes. And when you talk about putting computer chips in people's brains, that's even more dangerous potentially than self-driving vehicles that don't actually self-drive. And to kind of bring to fruition how extreme some of his claims have been, folks, we're going back to, okay, in January of 2016, I almost said and this is the claim that should make you question everything that he says, okay? In January of 2016, and that doesn't mean that you can't be an investor in his businesses, folks, okay? He's a brilliant man. Obviously, he's changed the world. But question everything he says. In January of 2016, almost 7 years ago, he claimed that within 2 years, you'll be able to summon your car from across the country. He was basically saying all the Teslas within 2 years are going to be self-driving, phenomenal vehicles, okay? Let's say you're in New York, your car's in LA, you hit a button, it drives you all the way across country. Folks, he was saying by the beginning of 2018, that would be happening. Well, we're 5 years later, and it's not even close. So if you're talking about implanting chips in people's brains and you're making promises, keep in mind the promises that he's talked about for self-driving vehicles, because to some degree, okay, the technology, anyway, for what it's worth, man, because that's been a constant on there. And still, to this day, man, I watched some videos online of Teslas in their self-driving when they are just oblivious to whatever is going on and creating accidents that should not be happening in any means. Now, they walk back those claims, of course, because they had to. I'm not sure how you don't get in trouble for something like that when you're making that claim as the CEO of a publicly traded company, and obviously it was erroneous, okay? There's no way that was something that was real when you're doing that, okay? But nonetheless, computer chips in the brain, that is going to be the future, man. I mean, I think I've heard Elon talk about before that basically our brain already is attached to a computer, right? The interface is just horrible, though. The interface is our fingers. So if you think about that, right, our brains are attached to computers by our fingers. But it's a horrible interface that takes too long, etc., okay? So if you got your brain patched right into the computer, you can see how that could change things. But, man, when I hear claims like that 6 months, I hope so, all right? I hope so because for paralysis, right, for things like that, you could see some dramatic effects when you start computerizing the brain. But, boy, be careful, man, when Elon is telling you everything will be okay, and reiterate that the claims that he's had previously have not lived up to fruition, to say the least. Okay, getting back to some of the numbers, let's just check around to see how the market's moving as we catch a little bit of a bid on the open. We got the S&Ps up by 14. Now, I was looking at this market yesterday, man, and boy, I wanted to go short a little bit if we came up to this 618 area yet again. So this is the acceleration, folks, from August 16th down to the lows of about 3,600. Now, I took, and it's an art, not a science, folks, okay? You could go all the way down to 3,502, but I took the area that the market chopped around in from about September 30th to October 17th, right? We had what? 1, 2, 3, 4, 5, 6 bars that had the lower part of their candle at that 3,600 point. We touched that area of 40.47 back on November 15th. You came back up there again on November 25th, saying, you know what, if we get back up there, maybe that's a good area to short. You don't know if it's going to work, folks. Okay, that's the whole point of stops. You don't know if it's going to work, but you play a probability game and keep that area on your radar, man. But we blew through it yesterday, and there was no reason to step in front of that freight train yesterday, man. It was a one-way trip. We got a slight reprieve. Maybe you got a reprieve from about 215 to 245, but all green from about 130 when the chairman started yesterday. So it is interesting where we go. I was talking to Kevin about potential of 2023. Now, you talk about a market, folks, okay? We are remarkably back to where we were on February 21st. February 21st. Do you remember what the market was talking about on February 21st, man? It seems like things have not gone well since February 21st when you talk about inflation, when you talk about some of the bigger tech companies. You got Amazon, right, just loading up on inventory, loading up on expenses, capital expenses, doing it too quickly, having excess, having to pare that back, that hurting their profits dramatically. If you told me in February that the Fed's going to bring it with 4 straight 75-point hikes, they're going to bring it with 50 after that, they're probably going to bring it with 25 after that, maybe 25 after that, you're still going to have inflation that's pretty rampant coming into December, and we're going to have crude now climbing back above $83. We say, is the market going to be above or below 4,100? I'd say below, man, with that in mind. Now, there's exuberance. I got a break coming up.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the Dow right now, negative by 63. A little bit of a rollover. This is a weekly I have up here, though. Boy, a lot of strength, man, in that market. And we get the Dow, all right? Let's put it back on a daily real quick. You're talking about a price level. Let's see what the percentage is right now, man. We're coming up. You're at 34,543. We were just sitting at 28,635. That's a run of 5,908 points, which puts it right now at 20.6%. 20.6%. It's a bull market in the Dow. Put on the bull hats, folks. It's a bull market in the Dow. Remarkable, to say the least. And yeah, the Dow, man. The Dow is trading where it was December 20th. There's no bear market in the Dow whatsoever. Now, as we know, NASDAQ 100, quite a different story. S&P is quite a different story as well. But nonetheless, 4,100 in the S&P is not that bad. We jump over to Kroger. Kroger had their numbers. We pull up the 15-minute. Strong numbers, but they sell off on the open. Interesting. Getting over to their numbers. They beat on the top and the bottom, I believe. Yes, 88 cents versus 82. 34.2 billion versus 33.96. And they had some strong sales, man. Yeah, at Kroger, identical sales rose 6.9% excluding fuel. That's an industry-specific metric that includes sales at supermarkets that have been operating continuously for at least 15 months and exceeded expectations of 4% growth. 7% versus 4%, man. Quite a number. Kroger gives it back, though, man. Interesting action. You give it all back. Basically from where we were yesterday, and this thing, that's from this year, basically a little bit higher from where we were at the beginning of the year, but you were all the way up to 62, down to 42. And you know what? This is what could happen next year when you talk about CHOP, folks. Just an example, right? Radical rises, radical falls, and where is Kroger? Within a couple bucks of where you started the year, 48.89. If that happens, man, as Kevin was saying, check out the program Fast Market, folks. They are a sponsor. But some of the ideas, covered calls, if you're looking for a flat market, and the great thing as well about the options market in particular, right? You can pick a side, and you can pick a side for CHOP. So let's say that you think over the next year, the market's going to be flat to down, right? Well, what do? You sell covered calls above the market, okay? If you think it's just going to be straight out flat, you can sell covered calls and covered puts wherever you want to be, right? There's a lot you can do in that market. And we're sitting right now at 4,100. And boy, it would be very difficult to see new highs made, man, with everything going on. Analysts would have to be dramatically wrong, and inflation would have to be skyrocketing lower. And not sure that's going to happen, man, because crude may be persistent in all of this. I mean, the market tremendously helped out by the prices of crude. So much for the days of 120, so much for the days of 100, so much for the days of 90. quite a pop of $10, but we're still sitting at $82. Still below where we were last October, folks, and that is not counting everything that's happened this year with Putin, Ukraine, etc. going on. All right, what else do we have pulled up here? Oh, continuing claims. There's so much economic data going on right now, folks. So, continuing claims are at the highest level since February, which is interesting because that's kind of where the market is back to, right? Recurring applications jumped by the most in a year to 1.6 million. You put it on a chart, and it is clear as day, folks. Now we got initial jobless claims at 225,000. Continuing claims are 1 week delayed, okay, folks? So I think this number, the initial claims are for the week ended November 26th. The continuing claims are for the week ended November 19th, okay? So keep that in mind when you get these claims numbers on Thursday morning. Initial claims are the most recent week ended. Continuing claims are 1 week delayed. But check out that acceleration, man. It's an undeniable rise, folks, over the last couple months, okay? And that could be indicative of people not being able to find new jobs. So here they put it, recurring applications, that's recurring, rose to the highest since February, suggesting that Americans who are losing their job are having more trouble finding a new one in a labor market that's gradually cooling. Now, we still got a lot of job openings, folks, and one of the most interesting parts of what Chairman Powell was saying yesterday, beyond just the general consensus, right, that, hey, we might have reached a point that we can tame the hikes a little bit, moderate the hikes a bit, was that he was talking about the impact on the economy. And one of the things that he was pointing out, and I'm not sure this is the case, was that because there were so many jobs open, that they could cool the economy, they could do away with the job openings, but not necessarily raise unemployment to the levels it had previously when you get this type of market action, because there are so many jobs opened that if they just eliminate the jobs that are open, that in itself will cool the economy without actually making people lose their jobs. I don't know if that's how it's going to work out. That seemed like a pretty bull case. And I was listening, I said, I don't know if that's going to play out, man. What if that doesn't play out? And you take into consideration everything else he was saying, it's a unique situation. We have an N of 1, a sample size of 1, all of that stuff. Take it for what it's worth, man. But we're going to be coming into 2023, folks, and hopefully inflation has been tamed. Over the next 6 months, right, maybe we see those numbers continuing to decline. The Fed is going to keep rates high for 6 or 12 months. And what's going to happen to continuing claims over that period of time? Because even over the last 2 months, now remember, the Fed started hiking in February, man, or March. We are 9 months later, and finally you're seeing the impact of continuing jobless claims rising. There will be a lag there, and we'll see how that plays out for sure. All right, what else did I have pulled up? Yes, we got to talk a little bit about crypto, man. I don't think this guy's catching enough grief, and I know he is, but I caught a little bit of cherry-picked of some of the discussion yesterday. And folks, it's a straight-out fraud scam, okay? I've talked about many times that I was very fortunate to have a history in online poker, which was basically offshore unregulated gambling sites. So it acclimated me to the risks, right, of sending your money to an offshore site that's guaranteed by nothing but the full faith and credit of that company that you're sending it to that's based in another country. Now, what would happen is in poker, okay, back in the day you had Full Tilt and you had PokerStars. And it was actually in PokerStars' best interest to not steal everyone's money, because they were making so much money by running a reputable poker site. That was the only thing protecting your money. And that was the only thing protecting your money with FTX. Well, what did they do? They didn't care. They just ran the gambit, took all the money, gambled it themselves, used crap coins for collateral, and it is a straight out fraud, okay? So like the whole setting yesterday of this discussion that the New York Times was running, I mean, I just found it a little disingenuous of the questions and the attitude in light of what he did and how obvious it is, to me at least, that it is straight out fraud. So he was at a New York Times event about the FTX collapse. He admitted gross errors while pushing back on fraud claims. It's straight out fraud, folks. All right, don't let this come into it. I mean, even the way that they're covering it. He said he, quote unquote, screwed up. I made a lot of mistakes. Yeah, he made a lot of mistakes. He made a lot of mistakes in getting caught. Okay, so keep that in mind. And I don't know what Bitcoin's doing at 17,000, man. Don't know what it's doing at all. Somehow that is the collapse of FTX and the industry and bankruptcies everywhere. You're in the market, folks. Pay attention. That's not what that graph should look like. Stay tuned, folks. One more segment. We'll be coming back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the market catching a bid, but Salesforce, not so much, man. With their numbers, disappointing numbers, and you got the co-CEO stepping down. Up to 160 yesterday, man, and you're down to 145 today. We're off about 10%. Now, bring over the article as we wrap up the program here. And boy, you talk about a fall from graces, man. Oh, come on. Where's my headline? There we go. Salesforce Taylor exits as co-CEO, leaves, is it Benoit? I should know. Brett Taylor says he's returning to his entrepreneurial roots. He was just put in that position, folks, just a year ago. So read into that. That's pretty, and I like Salesforce. I don't have any right now, thankfully, because this thing has been quite a drop-off. You put this thing on a weekly, okay? You're back to almost COVID lows. So many stocks trading down to COVID lows, man. Didn't think it was possible. But more than cut in half, chopping around at these low areas. So he steps down, but the numbers were out there too, and they were not even growing at 20%. And that's the first time. Let me get the cherry pick, the statistics here in terms of where they are. Yeah, fiscal third quarter sales increased 14% to $7.84 billion. It's the first time Salesforce has failed to generate at least 20% year-over-year quarterly revenue growth. Profit was $1.40. Intense customer scrutiny, to say the least. And they declined to give a revenue outlook for the upcoming fiscal year. That is always the biggest red flag out there, man. Yeah. Premature to offer a forecast, citing an unpredictable economic environment and currency fluctuations. They're going to offer guidance on fiscal 24 during the fourth quarter earnings call. Yeah, and I would say anytime you do that, man, they're not growing at the rate that they were. They're not giving you guidance. They have the co-CEO stepping down, so be careful on that one. That's like a trifecta of bad news out there for Salesforce. Strong company, man, but they are going through it right now, and growth suffering, to say the least. All right, folks, stay tuned. We've got our man Basil Chapman coming up next. Live programming all day. S&Ps above 4,100. We got the Dow negative by 21 points. NASDAQ 100, man, you're up by 0.7%, continuing the climb. And how about that gold contract, folks? Up $57. I'll tell you, my dad was messaging me today saying the gold stocks, though, they aren't up like the gold contract is, so you may see that roll over. Check out his program. He'll be back, my dad, today live at 3. Live programming all day, folks. Have a great Thursday. We'll talk to you tomorrow.